So we've had a slump in investments in Canada in multi-suite residential business like condos and apartments. In fact, earlier this year, it hit a 5-year low. However, a guest says the market ticked higher in Canada last quarter. Let's get more from Keith Redding, Senior Director of Research at Morguard. Keith, thanks very much indeed for joining us. So we have seen this weakness in condos, particularly in Toronto. Too many small units were built. But lately, we've been seeing something of a recovery in the multi-residential market.
Yeah, it's been, I would say, a modest recovery. We certainly activity levels are far below what we'd become used to. There was a lot of sort of speculative activity when, borrowing costs were very low for a substantial period of time. And so we had a market that was speculative in nature. We had some, particularly in markets like Toronto, as you said, we had some flipping of condos. So people would purchase a condo as an investment with the hopes of flipping that condo before it was completed. Because we had this really excessive demand in the market. We've since had a correction to that as interest rates increased, even though they've come down a bit over the past year. But we're at a point where there's a lot of opportunities to buy, and there's a lot more listings than we've been used to. And so, consumers and investors have more choice in the residential market. And so some have gotten back into that market.
And your numbers here are tracking transactions, sales of these buildings, with the cutoff being a $10 million price.
Correct. Yeah, we tend to track the top end of the market, so the bigger sales of particularly apartment buildings. These are purpose-built rental buildings, and yeah, we've seen an uptick in demand. Residential, typically, people need a place to live regardless of the economic environment, and the rental sector has performed relatively well historically, and so we're seeing more and more investors, both private and institutional to a lesser extent, looking to get into the apartment market.
Who are the big buyers of apartment blocks these days? Can you generalize?
Yeah, I would say it's large private groups. We've seen a little bit of activity from some of the real estate investment trusts. What they've been doing is selling some of their older assets and purchasing newer assets that are less capital intensive, and they tend to be attractive to renters. So we've seen some portfolio recycling, particularly with names like Boardwalk REIT, and where, again, they're looking to upgrade their portfolios for the long term. But there's a lot of private capital out there that's also interested in acquiring properties in premium locations. Perhaps they need a bit of capital injected into them to bring, as units become vacant, to upgrade them, and then they can push the rents a little bit on those as well. So I would say, generally it's the private capital groups, but again, REITs have been active as well.
What about offices? You are seeing something of a bounce in the downtown Toronto office market?
Yes, we saw with the banks, some of the major banks and some of the government agencies and departments bringing their employees back on a more frequent basis into the office. And that's generated some real positive momentum that we haven't really seen in the office market since, the early part of this decade, in part due to the pandemic. It's been pretty choppy since the pandemic, but the last little while, as I said, with the return of employees to their offices, that's really created some positive momentum. We've had a couple significant trades of major office buildings, 2 in Vancouver, recently, where that market, in fact, the market across the country was really very quiet. So we saw the sale of the Post, and then also 700, 750 West Pender. So two pretty significant sales that we really haven't seen in the last few years.
And just, we've only 30 seconds. What about warehouses? They were such a hot commodity during COVID for e-commerce. What's happening there?
So we've had a bit of leveling in the industrial market. We had, as you mentioned, over the last few years, a really strong pickup with respect to increases in e-commerce. It was largely driven by online shopping. Things have settled down a little bit, but the picture for industrial is really quite healthy and stable. We've got more availability, but it's still at low levels. Our construction cycle has slowed, so we've got decent demand and a slowdown in the delivery of new construction. And so that's had a stabilizing effect on the market.
Thanks very much indeed for joining us. Really appreciate it, Keith. Keith Redding, Senior Director of Research at Morguard.